let's have a look at the specific roles. Something that will drastically change is the way that assets are being issued. Currently, most of the assets, or some of them, are dematerialized. Okay, you take a deed, you store that deed, and then you represent that deed or that note by a digital representation, which is the process called dematerialization. In fact, also through the latest regulatory initiatives, securities and assets will become fully digital. That means instead of dematerializing them, you will digitize them. And they only exist on this distributed ledger, which is the registry that tracks ownership of those assets. And for that, issuers won't have the competence to build smart contracts reflecting and representing the underlying rights and obligations of a security. So that means there will be some tech providers or some service providers that actually have the technical capability of translating a security and all its rights and obligations into a smart contract and make sure that the security actually, or the smart contract, represents fully that security. That means it is capable of performing corporate actions and other corporate events that we have associated with that specific asset that they are representing. We will need, and I think we've discussed that, a digital asset registrar that could act as a notary. This party is not maintaining or is not keeping a centralized ledger. It is rather ensuring consensus in, for example, permission platforms or protocols. That means they will add specific transactions to the decentralized ledgers, and by that ensuring consensus. They also will provide settlement finality by notarizing specific transactions. So they perform a service function that will be vital for capital markets. We will need gatekeepers that ensure a AML compliant onboarding of parties, a constant screening of wallet addresses, for example, and also we use a concept of whitelisting associated or in relation to blockchain that allows a security token or any tokenized asset to only travel between whitelisted public keys. Okay, and there could be, for example, service functions that only focus on whitelisting issuers or also investors and provide that regulatory service to the capital market. Then, my personal opinion is I don't see in the near future that CBDC or any central bank digital currency could be used for settlement within capital market networks. And we've discussed that, for example, with Bank of Thailand in one of the projects that we did. And my decision or my advice would clearly be at the current stage that you use your own representation of, for example, the euro in that network in order to settle. And of course, by that, utilizing the full benefits of DLT in capital markets. So that means for that, you will need a cash tokenizer and a cash on ledger issuer, a regulated institution that provides cash on ledger as a utility settlement coin in that network to provide that cash and allow atomic swaps to happen instead of using a standard or classical DVP delivery versus payment for settling transactions. Then, of course, the regulator could theoretically, through operating a node, access the network. Whether they want it or not, that's another discussion. But theoretically, that'd be possible. And of course, the regulator clearly provides the framework and enforces regulation also for a DLT-based capital market setup. We've got a broker, an exchange, and digital asset custodian. In my opinion, I believe that specifically for cryptocurrencies, where we have so many exchanges and new coming up every day with quite significant spreads in pricing and a lot of intransparency about where the best price for execution is, I personally believe that the broker will become, for cryptocurrencies, even more important because I mean, what is the function of a broker? It's price discovery, transparency, and for cryptocurrencies, I think this is a very important feature that the capital market needs, and it's providing liquidity and facilitating settlement. So I believe especially that for cryptocurrencies, the broker will be highly relevant in the future. Still, for digital assets, this is the bridge also between, for example, a secondary market trading venue and the custodian, respectively the trader, of course. Exchanges, this is the venue where prices are being negotiated. With the maturity of blockchain, even now, I don't see how, for example, an order book could be running on DLT. Simply, we do not have this throughput. So I believe exchanges to still operate a centralized order book, but then interact through interfaces or operating a node directly with that network. And of course, we need that. Liquidity is, in fact, what the entire security token market needs, and exchanges will significantly provide to that. And then we have custodians. But now their role will be different. They will be digital asset custodians. Instead of storing the asset in their centralized system and reconciling with the CSD, for example, they will perform another service, which is storing private keys. And for storing private keys, they will need specific custody infrastructure. And that could be provided by a digital asset vault. Of course, in principle, whoever is operating that network will need that infrastructure components, but also custodians, and you see that by just checking the news, are already getting into implementing crypto custody solutions, because this is the infrastructure they need to store private keys on behalf of their clients. And so digital asset vaults or custody infrastructure from a technical perspective will also be highly relevant, and it will serve not only network operators, issuers, but specifically, of course, investors through the respective custodians.